Well, gold and silver are real money. That will help you preserve your wealth and also give you universal barterability. But you've got to have everything. So the gold and silver needs to be your foundation because it can protect whatever you are choosing to keep in the system, which
Right.
I'm an ex-banker, I'm an ex-stockbroker, and I have none of that garbage at this point in time. That was certainly not always true, but at this point in time, I understand the game. I'm very grateful that I had that opportunity.
Investors in precious metals and many other types of assets are understandably tired of the constant fluctuations of today's economy. Many people worry about the issues related to the stock market and worry every time they see their assets lose value. These investors often worry about such shocks and look to physical gold, silver, and other precious metals as a possible response to hedge against asset volatility and inflation. To combat the large amount of dollars being pumped into the economy and the falling value of the currency, central banks often deal with inflation by raising interest rates. While rising interest rates may appear to stimulate savings, inflation continues to hurt bond funds and savings accounts over the long period of time. In today's video, we will tell you why Lynette Zang says that we must own gold and silver to survive in this inflationary environment. But before we get into this video, make sure you subscribe to our channel and press that bell icon to never miss an update.
I would say that I see a lot of people that kind of are like deer in the headlights because there's so much chaos around that they just really don't know what to do. But honestly, that will not serve you well. You need to get ready. You need to be prepared.
In a nutshell, inflation is an increase in the prices of almost anything and the devaluation of the currency. This concept is a natural economic phenomenon that occurs. In a perfect world, these price increases trigger a subsequent increase in labor wages, which can help cover rising costs and keep people's living standards high. However, as we all know, we do not live in a perfect world, and a higher cost of living often has a negative effect on a person's purchasing power when salaries are not kept up. Thanks to inflation, a person may not be able to buy the goods and services that he used to be able to. Gold and silver are universal. That's why if you don't have it, you don't own it. You can go anywhere in the world and instantly have the same level of purchasing power, and they can't inflate it. If you look with spot gold and spot silver, these are contracts. They are cheap, they are easy to manipulate, and you can create all kinds of gold and silver that you can't. He knows that there are problems with the dollar and would make different decisions. You buy a share, you think you own the share. You buy this and you think you own it. Well, frankly, these are all contracts and they all carry counterparty risk. If you're talking to a normal person and you hear the term price stability, we think that prices stay the same. They're stable. But what the Fed really means by price stability is the level of inflation. And there goes that objective of 2%, and now the average, so that you, as the worker, do not demand more money from employers when you are looking for work. It is price stability. The biggest challenge with the Fed is that they lost credibility on Wall Street a few months ago when they made a 75 basis point move, when they kept telling the markets that they were going to do a 50 using their forecast, which is a tool they created after 2008. Well, they didn't create it then, but they've used it a lot since 2008 to let people know in the markets what they were going to do so that they could take a chance and be number one, help them out with this policy, and secondly, benefit from this policy. Gold and silver are real money, and they help you preserve your wealth, and will give you the universal ability to barter. But you have to have it all, so gold and silver should be your base because they can protect whatever you choose to keep in the system. Stable supply in the form of limited mining operations, as well as stable demand in the form of continued decoration and coin demand, means that the price of gold will remain stable for the foreseeable future. Silver's value generally fluctuates more than gold's due to its many industrial applications that tie the white metal to the fortunes of many industries. Platinum and palladium, other rare metals often invested in to hedge against inflation, are also prone to fluctuations. Inflation can reduce a portfolio as much as any other form of risk. Gold, silver, and other precious metals can be a sure way to avoid these pitfalls and protect a savvy investor against the forces of hyperinflation and inflation. When diversification is an investor's goal, gold can still form a segment of the investor's portfolio.
The biggest challenge with the Fed is having given up their credibility to Wall Street a few months ago when they did a 75 basis point move, when they kept telling the markets that they were going to do a 50 using their forward guidance. They used it extensively since 2008 to let the markets know what they were going to do so that they could get into a position and, number one, help them with that policy, and number two, to benefit from that policy.
That's all for today. Let us know your views in the comment section below, and don't forget to like this video before leaving. Thanks for watching.